Hi, welcome to Fayday channel, YouTube channel. So my name is Mac, I'm the founder of Fayday. And today we have Eric, the co-founder of GenCap. And Eric, why don't you do a quick introduction about yourself?
Cool. Yeah, thanks so much for having me, Mac. I really love the podcast. Really appreciative that you're doing this for the whole ecosystem, right? So, my name is Eric. I'm the co-founder of GenCap. I'm the CEO. So, what we try to do is we try to continue the good legacies of very profitable SMEs by introducing really great world-class operators, and hopefully we can continue their legacy and grow them to a further stage. Yeah.
Got it. So when did you start GenCap?
Yeah, so maybe I'll just take that question back a little bit first, right? So, and actually coming back to your original question, so I've been always a serial operator. I've started my career with the National University of Singapore. There was this program called the NUS Overseas Colleges, where we sent third year highly entrepreneurial students to various parts of the world, hoping to learn from the best entrepreneurs. So I ran the Silicon Valley office 2012 to 2014. Got infected by the entrepreneurial bug myself. So came back to Singapore for the past 10 years, have been COO level for 3 startups. First one in payments, the other one in advertising technology, and then the most recent one up until 2024 was Web3 blockchain on the enterprise software level. So that past 10 years was kind of like very formative for me for what I'm doing today, because one, looking at Singapore from a venture capital model of where it's powering the growth of startups here, right? It's not a good fit in looking at what the VC model is bringing from the US. It's not that it's not doable, but I think you're looking for that diamond in the rough versus the US, where I think the market's a little bit more homogeneous compared to Singapore and Southeast Asia. And finding that kind of like really enduring outsized returns for startups is really, really tough. It's not impossible, but the probability is extremely low. So I think end of 2023, early 2024 was when I started to kind of like take a break and really take a step back and try to understand what was not right about my journey doing that whole reflection thingy, right? So met a lot of investors, met a lot of advisors, etc. And I got a couple of advice and sharing in that one, I'm a serial masochist. In that I keep looking out for pain, and why do I keep doing that, right? The second one is then they asked me to maybe don't start from scratch again. Look at what's in the economy today and what's actually powering Singapore, right? From that thing. So, to me, very simplistic and obviously very simplistic things here. One is foreign direct investments, not the topic for today's podcast. The other one is more on SMEs, right? It hires the vast majority of people in this region. I'm not just focusing on Singapore itself, but this region. It claims as 99% of all people in the workforce. And it has really been powering all the countries around Southeast Asia, right? So when I just look deeper into it, there's a really nice window of opportunity there where there are highly profitable SMEs, I'm sure you know, Mac, of which are actually facing the problem of succession, right? They have not grown sufficiently enough for private equity to come in and take them over, or actually are they small enough, you know, at the end of the day are just going to close it off and whatnot, right? But this bunch of SMEs are in between like 1 million to 4 million from a net profit margin perspective, and their kids are not really interested in taking over the business because these businesses are in some sense boring by its definition. Number two, some are really difficult, right? You're talking about the hardware manufacturing, engineering, etc., where you literally might have like oil and grease on your hands. Compared that to a very nice cushy is not the word I really want to use, but a very nice comfortable salary in an aircon environment, traveling business class, first class, like which would you choose, right? I think it's a bit difficult from a story perspective. So I looked at that as an opportunity to actually help continue the SMEs into their next phase, right? And how, again, taking just a step back, I'm not the only startup operator that is facing what I just mentioned to you, in trying to put my best years ahead of me, or rather behind me now, in trying to do a 0 to 1 venture, right? I think that there is a better platform for operators, highly qualified operators, very hardworking, very, very highly networked, to spend their time and effort into a asset class that has already started with a very nice foundation, right? So continue with that foundation and then grow it to the next level. I think that's really the genesis of what GenCap is today. Yeah.
Got it.
Yeah.
So back to the earlier question. When did you started GenCap?
We started GenCap about slightly about a year ago, in June. So I met I knew Zach many years now, so we remain as good friends. I pitched the idea to him. He knew I just was this a left startup, so I'm just figuring out what next, right? I pitched this idea to him. He pitched back the same idea to me.
Nice.
So I looked at it as very complementary skill sets. For me, I'm a serial operator. For him, he's been in VC PE for the past 8 years, looking at thousands of business models. So he did from EDBI and then went to Kwok Family's VC outfit, and then the last one is Radical Fund, which is more of an impact investment thing. So again, very similar in terms of theme, very different in terms of background. So I look at it, our skill sets were extremely complementary.
Makes sense.
Yeah. So that's actually the genesis of GenCap too. Yeah.
Great. So for yourself right now, for where you used to work in a startup, now you're trying to build GenCap, which is like a search fund platform.
Yes.
So in that sense itself, can you share with me what was your learning in the past 1 year?
The past 1 year has been very interesting, right? So a couple of things from an operator perspective. I think that was our first hypothesis. We really needed to get the best operators in that vertical at the right timing to actually run the SMEs that we're going to acquire.
Sure.
I thought of all the things that GenCap needs to focus on, that would have been the hardest, because you're really, again, needle in a haystack, right? But you've seen it yourself. Like you were very active in our ETA bootcamp a couple of weeks back, and thank you so much for that. The interest level of really highly qualified professionals is there. The numbers are there, right? So we have about 40 active potential operator partners now within our network, who at the moment that we can actually find a good asset for them, they are more than willing to take a look at it and jump, right? So to me, I felt, again, just coming back to the problem statement here, right? Like, super hard to have found the operator because this model is new.
Sure.
But I think the story is compelling. From a risk reward perspective, the operator is in between, the operator model rather is in between starting from zero or continue with your MNC job, right? So this is where I can provide very modest salary. So, and we recommend anywhere between $8,000 to $12,000. Very nice as a modest living in Singapore. At the same time, being able to be afforded a good chunk of equity from the startup, right? So you have best of both worlds. And I think from a returns perspective, this might maybe be the solution for very highly entrepreneurial operators out there. I think that's my personal biggest learning. I think there are a couple more. I think we can go through the podcast today about finding good deals, finding good investors as well.
Great.
Yeah.
So you feel that from the demand side of things, there's people who wants to work during the takeover of the SMEs.
Yes.
Do you all face any headwinds during this 1 year journey?
Headwinds, I think the first one, we are both new.
Okay.
Right? We are both new to the whole ecosystem. We are both new to the model. And even beyond that, the model is new. So I think there was a lot of, from a credibility standpoint, we were starting from zero.
Makes sense.
Right? So I think when we try and speak to our advisors, our backers, good friends, right? They keep telling us that, hey, what is your proof points? How are you going to convince investors in a new asset class, in a new product, in a new structure that they are not familiar with, right? And so we actually modified our model, our financial model, our business model many times because we are reinventing the wheel. We are introducing something different to the market. But then what really worked was there was a small bunch of investors in Singapore that is very familiar with the search fund model. So what we did was we doubled down on them. We went back to basics. We looked at the traditional search fund model that Stanford made popular from its primer, and we just continued with that. So we stopped innovation from a business model perspective and went to that, right? So we didn't need to reinvent the wheel. So with that, I think things started to happen, right? The investors started opening their doors. We started to connect with more operators. We started to connect with great brokers like yourself in introducing potential companies to buy, and then we just link them all up together. Yeah.
Great. Okay. So far, I mean, you do fundraising.
Yes.
You do the deal sourcing side by working with many intermediaries.
Yes.
Do I call it?
Yes.
You also look for operators as well.
Yes.
It's quite a handful, right? So how do you even manage juggling so many balls at one time?
I'm a really good partner. Shout out to Zach out there. I'm sure he's going to watch this. So that's why it's complementary, and I'm a big fan of being able to realize where are my knowledge gaps, what I'm what's my strong suite, and where I'm lacking, right? So, and then just find somebody who's really good at what you're lacking, so that you really don't need to do everything yourself, right? So for me, my network is really trying to find the best operators. Coming from the operating world itself, that is a very good start already. So I have obviously my own network, and from there they introduce who they think are great operators to me, and that has been the starting point. There will be more organic efforts like what we did with Elise, one of our community partners, Asia Satellite Network, just shout out here again, on trying to educate the market and community in bringing up the whole concept there. But coming back again to your question, so how it's between me and Zach that we split the role. So for myself, I look at operators. For Zach, he worked with brokers very clearly and identifying great assets to buy. And then together we'll bring the searcher as well as operator to go and just double down on the assets. Yeah.
So for anyone who is keen to potentially buy a business,
yes,
can they or keen to even be part of be an operator? Can they contact you directly?
Yeah, just contact me. Just reach out. I'll share with you my details, maybe the show notes, or LinkedIn would be fantastic. Just drop a note saying that, hey, this is my background, this is my experience, this is my interest. Is that something that we can chat about? Like, happy to have coffee with them.
Great.
Yeah.
So far, within 1 year,
yes,
how many of such interested operators have you got in touch with? Estimate number, right?
No, it's definitely more than 100.
That's great.
Definitely more than 100, right? So, but not all are actually ready to make that jump. So, of those that have made that jump and what we call as GenCap potential operators, those are around 40-ish. Yeah.
So, what would be the typical characteristics of such operators?
Yeah, so I think the first filter is this, right? One, actually there are three key criteria that we look for. One is we look for somebody who has done profit and loss responsibility from nose to tail. So a lot of operators typically look at on the operating side, meaning looking at what to expense, what to improve, but they don't really have that hand in actually growing the business from a top line perspective. So we look for operators that have done both, right? And that his neck or her neck is on the line if that P&L goes haywire. So because it's essentially I'm trying to mirror what that person needs to do when he takes over as SME.
Makes sense,
right? So if it's going to be something new, you're going to continue some of this legacy. You don't want to kind of like spoil that. So you need to have that both sides. Second one is this is something that GenCap does very actively. I want to look at the SME's the operator's background. You need to be in the vertical that you that you say you want to operate in. So like for example, if you are in F&B, you must have had operated F&B business before. from an operator perspective, or engineering firm for that matter, it's very critical because now you're not starting from scratch. You're taking over. Their music starts almost immediately once you take over. There's almost very little time for you to actually, I need to find out where are the best vendors. I need to find out like how do I actually treat these growth drivers, cost drivers. Too late, I feel. I think the learning curve is a bit too steep. So we want as much as possible that person to already have, I know my preferred vendors, even outside of their business itself, right? So there are some businesses that are a little bit less complex, that are a lot more rules-based, that potentially you could get a more generalized operator instead, right? So I think that's our second one. The third one, I want to have somebody who has seen the market from top and bottom as well. So from a top perspective, I know how to capitalize on growing the company.
Makes sense.
And at the bottom as well, if the company is not going well, what do I do? So for example, I might need to actually shrink the workforce.
Yeah.
How can I do it effectively, humanly, right?
Yeah.
So I think that's very important as well. So I think those are the three criteria. That's the good operators, great operators. I would say those that are fantastic in terms of interpersonal relationship. Being able to learn very fast, think on their feet, and being able to adapt, right? I think those separates what's the good to great.
Makes sense.
Yeah.
Makes
So
sense.
those are my thoughts.
Let's say if there's an operator itself, someone who's keen to be an operator.
Yes.
They have no prior experience in that particular trade.
Yeah.
Do you even recommend them if they want to use their own funds?
Yeah.
Do you think that this is considered as a wise move?
It depends on the conviction of that person in the end of the day, right? So, like, notwithstanding Gen Cap, if that person, like, for example, we've seen a couple, right, during the boot camp, they actually already, like, immediately after the boot camp, I'm actually helping a few right now to identify and buy, like, outside of the Gen Cap family thing, right? These are businesses that she feels that she can run without actually understanding the business too deeply. Because what she's done is she looked at the current workforce of the target itself. Can she actually elevate somebody within to help her from a general manager perspective? So that was her tactic and strategy. So what I recommended to her to do is, what if that doesn't work? Then she needs to probably either hire somebody really relatively fast, or she needs to roll up her sleeve and do it. So all those things, like how much conviction can she do? If she says yes, then I think some semblance of risk is mitigated. Yeah.
Okay. So back to this earlier on.
Yeah.
So based on your for the audience benefit.
Yes.
Between GenCap and a typical search fund, what would be the biggest differentiator then?
Okay, so why we did GenCap is also because looking at a traditional search fund model, there are some inefficiencies. So a search fund, let's look at the type of person, the capabilities that a traditional search funder, experienced traditional search funder needs to have, right? One, you need to be actually able to know how to do an M&A deal. Right, from start to end, what sorts of legalities, how do I actually evaluate a deal, etc. These are things that can be learned, but do you want to actually learn on other people's dime? Right, I think that is the first thing, right? Or on the other side of things, so once you start purchasing, or rather you completed the acquisition, you need to operate. So what I'm trying to get at is you need to be an extremely good deal maker as well as an operator, right? Very rare.
Very rare.
Very rare, right? There are great ones in Singapore that have what's this mixture of both, but at the same time, I'm personally very key, aware of my capabilities. I'm an operator, I'm not a deal maker. So GenCap tries to fix that, or rather try to addresses that by us finding an operator and that person be world class in its own right. And for us, we look for searchers that actually are deal makers. So together, they become a unit. And so that's something that we differ from traditional search funds. The second one is traditional search funds. What they do is it's a very cyclical thing. right? So you raise your first $500,000 for a period of 2 years. You look for a perfect asset for you to buy, and then you run for 4 or 5 years. You sell and then do that again, maybe 2-3 times based on your lifespan.
Yeah.
Right? So to us, I think there are some inefficiencies to that. First one, when you go and look for a broker, the type of people that you need to network and create relationship with is very different after you buy you buy and complete your acquisition. After that 4 or 5 years, you need to be laser focused in terms of operations. Coming back again, once you finish that whole cycle, that 4 or 5 year cycle, you need to search again. So then you see it comes back that, hey, I now need to go and look for people like you, Mac, that I've actually not kept in touch for 4 or 5 years.
Yeah.
You might have grown really, really well, and then now I've become like less relevant to you, for example, and the whole relationship just isn't efficient, right? So I think that's the second one. And then the third one as well, on the search fund perspective, it's based on the timing where you're in from an economic perspective. So let's say I'm again using the F&B experience, for example. Like maybe this time of the wave where rentals like all sky high and whatnot, right? Maybe it's not the right time to buy restaurants. But because I'm limited within my 2 years window, I have to buy something relatively fast. So from a macro perspective, it works against me. Right? So versus GenCap, if it's on the platform perspective, I kind of like differ that macro a little bit more. Like if today is not good for you, then just wait 3-4 years down the road. And maybe for us, GenCap, we focus on different verticals instead. So from a cyclical thing, we are a little bit agnostic on the verticalization. Yeah. So I think those are the key differences. Yeah.
So back to GenCap, are there any sectors that you pay attention to?
We try to be sector agnostic for now because we are really new to the market.
Sure.
So we do see some great assets in engineering, challenging, super great assets, like great businesses. But for somebody to actually understand the business and to run it is actually quite hard. Yeah, I'm sounding a bit contrarian now in terms of what I just mentioned to you in terms of the availability of operators, great operators in the past, in the previous questions, but very specific to engineering focused operators, still very hard.
Makes sense.
Very, very tough to find.
Yeah. I can imagine because Singapore manufacturing sector has actually been shrinking over the years.
Yes.
In my opinion.
Yeah.
I think that some of the Southeast Asia country and China has pretty much the lion's share of the manufacturing sector, right?
Yes.
Okay.
Yes.
So, are there any sectors that you not be so keen to look at?
It very opportunistically for most sectors, but again, I think actually F&B is actually tough in Singapore. From a small business perspective, I think on the cost structure, on the rental as well as manpower, very against you, right? The rental is not something that a small business can control.
Correct.
Not even manpower, right? So for manpower, you're faced with two things. One is quota. A lot of small businesses do a lot of creative ways to look at quota. The second one, even if you have quota, can you find the right people at the right price?
Yeah.
Right. So again, the local workforce is tough. Like working in F&B is not something that most people would want to do.
Yeah. yeah, you're right. I mean,
being very realistic and practical about it.
The hours are long.
Yes.
Singapore customers are not the best to deal with. I can imagine, and of course the compensation side of things, right?
Yeah. So it's only because of what's happening in Singapore from a rental and manpower perspective. When we look at other markets, like for example in Malaysia, it makes so much sense because those two are actually kind of like negated.
Yeah.
We are actually evaluating a couple of deals in Malaysia for F&B. Yeah.
In fact, recently I've been to KL and Penang.
Yes.
The rental there are a lot more reasonable. And I did have a chat with some of the F&B. I won't say F&B. I did have a chat with some of the business owner there.
Yeah.
Apparently, to hire people, it's not a major challenge compared to Singapore.
Yeah. Yes. So that's that's my take on it.
Great.
Yeah.
So are you able to share with me in terms of like business, right? Of course, you want to acquire businesses.
Yes.
On that sense itself, I'm sure maybe out of 10, you'll be only looking at 1 or 2. So what differentiate between that 1 or 2 companies compared to the balance 8 companies?
Okay. Now it comes back to the fundamentals, right? And I think probably something you've seen too, from a valuation perspective.
Okay.
So the concept of entrepreneurship through acquisition, a lot of what needs to happen is a certain sort of formula where the valuation needs to lie. So what we recommend is anywhere between 4 to 5 times EBITDA. So, but from a seller perspective, especially in this part of the world, that might seem low, right? So, from our conversations, from our experience, a lot of the sellers have a magic number in mind, and typically this is $10 million.
Nice.
Another
10 million sounds nice, yeah.
Yeah, exactly, right? So that $10 million in my mind, and how we rationalize is maybe that's the ambition.
Yeah.
You know, after I worked 30, 40 years so hard, I want to at least end with that, regardless of how my state of that business is right now.
Yeah.
Right? So I think that's one. The second thinking is, hey, I want to actually have a connection between my valuation and how much money actually I've put into the business.
True.
So if it's going to be like heavy in from a capex perspective, I want to recoup back everything.
Yeah.
But actually, your business from a performance level just doesn't reflect that way, right? So again, then it becomes difficult from that conversation. So I think valuation is a very good indicator for the first filter.
So
Right,
aside
yeah.
from the valuation side of
Yes.
things, what about the other aspect of things?
So from a cyclical perspective, we try not to have businesses that are more susceptible to cycles.
Okay.
So something that's a little bit more enduring, and it's something that I'm providing value on a constant level perspective lah. Yeah. So like for example, education, right? For example, so like it's quite kind of like stable from a demand supply perspective. I think that's nice. So things like on a trading level, we try not to touch, because again, like for example, like what Trump did, it's not something that a small medium business can control.
True.
But it's going to affect, good or bad, business, right? It's not something that we can predict. So it's not something that we want to play in as well. So on that cyclical level too. Yeah.
Makes sense.
Yeah.
Makes sense. So aside from valuation standpoint, cyclical standpoint, any other things that you think is important? I mean, why do I ask that? Because for any business owner, they might want to approach you directly, right?
Oh yeah, thank you. I think the rapport is very important.
Sure.
From the seller to the buyer, GenCap perspective, right? Very important. So I think from a motivational perspective, you would want to work with sellers that have already made up their mind and their heart also, both sides, right? Top as well as your emotions, in terms that I want to take this through. Right? And I think this is where actually, if I can just put it back to you, Matt, I think that's a very important role that brokers are doing. Like the first cut of that filtering is already done by you, and thank you so much in trying to understand the motivations of seller. And I think that by you doing that, like everybody's aligned from an incentive perspective.
Sure.
Right. So that's to me very important. And on the transition side, from a business perspective, we will want to work with the seller like at least 6 months, 12 months into us acquiring the business. Why? Because I think there's a lot of knowledge transfer that needs to happen in between. Like if the rapport isn't good, if the motivation isn't good, I think that period, which I feel is the most critical of all the periods, would then not be workable.
Got it.
Right? Yeah.
So aside from the business economics has to make sense.
Yes.
The valuation has to make sense.
Yeah.
The cyclical, whether it's cyclical or consistently stable.
Yes.
And the third thing is the chemistry, right? So these are the 4 things. Okay. So for yourself, I mean, 1 year has passed. How many businesses have you acquired to date?
So we have officially done, we've officially finished 1. We have signed a sale and purchase agreement for the second. We are working on 3 more. So the first one is electronic health record. So it sits between medical as well as what's this technology. So the intermediary in between, with about 2,000 clinics in Malaysia. So this is kind of like a corporate spin-off from one of the public listed companies in Malaysia who feels that this healthcare as a vertical is not core to their business anymore. So I think there's a change of management as well. So it's kind of like an effort to divest things that are no longer within their core strategy. So this was one of them. So from a price point perspective, it was very modest. It was great for us, in fact, to be our first. It was not a big acquisition, but I think it signals interest from that ecosystem standpoint. The second one, and we hope to continue and finish at the point of when this podcast will be released, is a corporate secretarial firm. That's in Singapore. So that's going to be very nice as well. So our third, fourth, fifth deal would be hopefully in the logistics space, the education space, and I'm blanking now what's the fifth. I'll come back to you.
Sure, don't worry.
Yes.
So typically, right, I mean, the whole M&A journey is quite long, right? Lengthy process, a lot of things need to be done. Many stakeholders involved, whether it's the buyer side,
Yes.
the seller side, maybe it may involve a lawyer, it may
Yes.
involve accounting or audit firm,
Yeah.
or even companies that do due diligence, right?
Yeah.
And even corporate secretarial companies as well. So typically based on what you see,
Yes.
from the point where right now it's completed, and if you backtrack that to the early stage, how long do you think those sellers, the business owner, has been on the selling journey? Like for how long? Based on your observation, right? Is it like any
Wow.
months or years? Or?
You're talking even like before they connected to GenCap.
Yes.
Wow. So it varies at this point of time. I don't know whether I can safely share with you a pattern. I'll draw analogies from maybe just a few that were working on really hard. Some had actually been on the market for about 2 years.
2 years.
2 years.
Wow. Yeah.
I think there is a lot of kind of education and learning for the seller side as well to say that, hey, what actually is the interest level from a buy side, right? So, and then I think there's kind of like a tapering typically and re-evaluating of what is my asking price. And also I think they from what I hear, right, and what I feel as well is, I think the seller is trying to look for a decent buyer too, from a personality and characteristic perspective. It's an emotional journey, right? So I've built something up 30, 40 years. I don't want to sell to somebody that I probably don't like and probably unsure like what you're going to do to the legacies of my business. Why I'm quite confident with what I just said is a lot of times that we hear from the sellers is please and ask, right? Like, please do not fire my staff. So that tells me, I think there's a lot of emotional attachment towards the business, and you only can get kind of like the assurances if, again, coming back to my point, a proper rapport with the buyers. Yeah.
Okay, so 2 years is what you see, is it?
There are 2 years, some are 1 year-ish, a couple of months when we're lucky.
Yeah, okay. So it can range from
Ranges, yeah.
6 months to 2 years.
2 years, for example, yeah.
Wow, so it's quite a long journey.
It is a long journey.
And it's quite a lot of things that sellers has to do, right?
Yes.
Yeah, so a lot of things. So before you sell, you might want to think like, it's a lot of pain going through the documents, preparing, meeting the buyers, having the conversation. And sometimes this business is like the business that we're trying to grow for the last 20, 30 years, right? And to talk about it with another party,
yes,
it's not so easy, right?
No, not at all. As in, I think that it needs to be some vulnerability. In fact, for the sellers to actually admit that, hey, this is the state of my business.
Yeah.
Right. So you might have more of those conversations than we do from GenCap perspective, because we're kind of like a more of a commercial partners to begin with.
Yeah.
But for your side, I'm sure you would actually have some of those conversations too.
Of course. I mean, from my side, Fede is a business brokerage firm. One of our main audience that we speak to are SME business owners.
Yeah.
And like what you mentioned earlier on, business owner have a magical number in mind, right? Some will have like, hey, I want $10 million, right?
Yes.
Whether or not it can be validated, that's another story lah. Well, so on that sense, sometimes that part of it, it might be hard to tell it to them. I mean, obviously everyone can just say it, right?
Yes, sure.
But to reconcile with the fact that, hey, my business is not worth 10 mil, maybe it may be worth 1 mil. You know, that kind of thing takes a while to reconcile everything together.
Yes. So, sorry, no, please go on. Go ahead.
So that part itself, I mean, from a broker standpoint, we can share, right? But for the sellers to register it in their heart or in their head, that depends on you know what the Chinese like to say, 天时地利人和. Everything has to come together. Then they realize, okay, it's impossible to get it at 10 mil. So maybe let's settle it for like 1 mil or 5 mil, right?
Yes. So I think it comes back to a couple of points. Fantastic things, as you say, right? Because on our side, we need to be answerable to our investors too.
Sure.
So they themselves has a formula within their head on how to value deals, and these investors are primarily sophisticated investors. So these are either investing from their own personal balance sheet, but they were in their professional lives like private equity professionals. So they've been like every single day evaluating businesses already. Then when they look at SMEs, and suddenly there's a disconnect in terms of valuation, the deal just won't happen, right? So,
of course.
So I think from a practical perspective, people, we try to look at the motivations of each and every party within the room. Try to synchronize around that.
Got it.